Could this number 59.9 be an early warning sign for worse to come? And what does it mean for the housing market? Major causes for housing market crashes include an economic downturn, property overvaluation, tightening credit or lending rules or access to capital, an oversupply or an external shock. We are unlikely to have an oversupply issue, and given the amount of money that has been printed in the last few years, I don't see an overvaluation issue. There is a lot of cash in the market and lending rates are holding reasonably steady. There is a lot of things that could trigger an external shock at the moment, but those things are might. They may not actually happen. They may not trigger an economic downturn. They're still mights at the moment. But there is one number that we should pay attention to as an early warning sign. Many studies have found that consumer confidence or consumer sentiment and house prices in terms of appreciation and depreciation are quite strongly connected, which makes sense. When confidence drops, house prices growth tends to decelerate or drop. When confidence is high, prices tend to go up as well. What happens when people lose confidence and sentiment starts to drop? I got into a heated debate about a year ago about the fact that sentiment controls markets. And while this is true, I strongly believe that something has to happen first to trigger that sentiment drop, and that is just as important. But regardless of that debate, in terms of what actually triggers it and what actually happens, Ireland's consumer confidence has fallen to levels not seen in years, not seen since COVID first hit. And this could be that yellow flashing light for the housing market. According to the Irish League of Credit Unions, the Irish consumer sentiment has dropped to 59.1% in July 2005, and it's still remaining at 59.9% as of October. To put that into context, the normal average is around 84. To put this into a wider context, customer confidence in Ireland fell to just 39.6 in July 2008 during the financial crash, and again fell to around 53 in April 2020 at the very start of COVID. At both times, housing prices dropped sharply, but unlike 2008, prices did bounce back very quickly during the pandemic in 2020 because there was strong demand and supply was extremely limited. Customer confidence being so low right now is worth noting, because customer confidence and sentiment is critical for the housing market, because it reflects how people feel in terms of how secure they are about their job, their income, their future financial stability. All key factors when people are making decisions around major purchases like homes. When confidence is high, buyers feel safe in taking out a mortgage, which drives more demand and drives further price growth. When confidence drops, people delay making big decisions. They reduce their demand in the housing and they're slower to sell. And sometimes it triggers price drops or corrections, but also people will delay making that decision to sell or trade up in their house, which will reduce supply even further. Buying a home is perhaps one of the single biggest purchases most people make. They're reliant on a job, they're reliant on their ability to pay a mortgage, and they want to have a belief today that their investment or their property will be worth more tomorrow. And they need that confidence. If that confidence does drop, people delay making purchases, there's fewer first-time buyers entering into the market, and builders and developers who are so scarce at the moment will pull back even further. I'm not saying a crash or a drop is certain or will happen anytime soon, but there are some triggers we need to watch out for. A sharp drop in consumer confidence below that 50 mark will be a telltale sign that house prices are likely to reduce in the near future, perhaps in the next 6 to 9 months, if we do cross that threshold. We may reach that drop of confidence in consumer confidence below the 50 mark if we see further unemployment from AI and major job losses. Perhaps there is more issues in terms of getting capital, And there could be a major shock to wealth, i.e. a stock market decline. There's issues with exports and stuff like that, as well as major political issues overseas. There are likely going to be some major global shocks or corrections coming. There are a number of factors that are causing some major concerns at the moment, particularly to our current economic model, particularly from an AI point of view, a political point of view, and even ideology shifts. And they're all going to cause major issues in terms of how the world operates and how major states operate within the world. There's also going to be likely an energy crisis if that hasn't happened already. These changes, or likely changes that are coming, will shake or perhaps rock many markets. What I am hoping for is a recovery that is far quicker than normal. Generally, those recoveries are happening far quicker than they used to in the past. Any major shock like this will have a major impact on consumer confidence. But what kind of impact will it have on the housing market? It may not have the same impact as many might predict. Standard economics would suggest that if we have a major shock or a major weakening in consumer confidence, we are going to see prices drop in the near future. And this is what is likely to happen and has happened in past events. However, there could be an alternative reaction. Similar to what happened during COVID. Prices might drop very quickly for a month or two, but then they might start to rebound and rise again even faster. And this could happen because of some very critical factors. Supply is extremely limited. And we also have more than 50% of homes owned in Ireland held without mortgages, meaning they won't be looking to sell. We won't see that spike in supply that we would normally see in crashes, and therefore supply will be even less. There will be a huge amount of cash on deposit, and that cash won't be holding the same value, and people will be looking for hard assets like property. And in Ireland, people do like property, so they might be putting more money into it. Even if times are very uncertain or unpredictable, people might be forced into making that property purchase to protect their wealth. Right now, consumer confidence is very low in the States as well, around 53%, but the stock market is up and house prices are up in many markets as well. But job numbers are down, and a lot of indicators would suggest that the US is in a recession if you take out one or two of the major companies. But prices or asset prices are still rising. What are your thoughts on this? Let me know in the comments below. If we do have a major economic event, will it actually trigger a housing crash, or will the lack of supply actually keep prices up?